Hi everyone, it's Rob Cosman, and I decided I'd finally put together a video because this is one of the most common questions I get from Canadian Amazon sellers is, should I start as a sole proprietor or as a corporation when I'm starting my Amazon business, or when should I switch? I'm going to talk about a few different things today, but there's no definitive answer necessarily on if you should switch one way or another. It all depends on everybody's individual situation. But what I'm going to do is try to cover just kind of some general thoughts. Everybody needs to come up with it on their own and decide if what makes sense to them and their individual situation. But I just want to address a few things that are pretty common and stuff to think about. So, those of you who don't know me, I'm a Canadian CPA, CA. My wife and I have a accounting firm, jonescosman.com. We basically target our niche is Amazon sellers, online sellers, Shopify, Canadians. YouTube channel you're probably seeing this on. Follow us on Instagram, Chasing My Beach, which is more of our lifestyle because we live in Costa Rica. So that's more family. We've got our tacos group, which is an accounting and Amazon seller group on Facebook. And for me, I have multiple e-commerce businesses. I'm also an Amazon seller, but more so I'm an Amazon accountant. So yeah, and we live in Costa Rica. Now, sole proprietor. So basically, a sole proprietor is you. If you decide you just want to start a business, you can start it right now. I mean, as a Canadian resident, it's your obligation to report your worldwide income. So any money that you made, on the side, selling worldwide in Canada, US, as long as you convert it back into Canadian dollars. So the sole proprietor is kind of the easiest and usually what, most people start with because it really doesn't cost much. You can just kind of say, okay, I'm in business now and I'm going to start selling on Amazon and open up an Amazon account and put it all under your own name. Some provinces you can register, like in Ontario, you can get a master business license, and others you can. And what that does is kind of allows you to, kind of operate under a trade name. It doesn't really matter. I mean, you're starting an Amazon account, you can call it Rob's House of Crazy Deals. Like, who cares? It doesn't really matter. So, sole props, super easy. All you're doing is you're going to report your income on your personal income taxes, and you can kind of start at any point. Now, should you register for GST and HST? I'll talk about that later. I usually advise yes. Actually, I'll probably just talk about that in another video. But, the sole prop is kind of the easiest way to get started if you're not really sure if this business is for you. You want to keep your costs low. You're just starting out. You want to try it. To go and spend a couple $1,000s to set up your corporation and, all that. Like, it could be just simple. Just give it a shot. You can always switch it later. You can run a sole proprietor and then switch it into a corporation, at a later date. That's not a big deal. It does take some time and effort, but, it's all doable. But if you're starting out and you're really not sure if this business is for you and you're just kind of testing it, then sole proprietor could be kind of the easiest. Sorry, I've got airplane. Okay. The other thing is most of the deductions that you're going to get, people think that necessarily you have to have a corporation to deduct your business and home office and things like that. No, you can get all that as a sole proprietor. You don't necessarily have to have a corporation. Okay? But the flip side is now, as a sole proprietor, you're going to pay whatever your tax rate is. So in Canada, the tax rates kind of go up in steps depending on how much money you make. So as you continue to go up and make more money, then you're going to pay a higher percentage on that kind of next step. So for some people who've got like a full-time job, let's say you're making 50, 80, 100K, and then you start making money on Amazon on top of it, you're going to pay a pretty significant rate. So one thing that tends to be one of kind of the overriding factors is a lot of people will start Amazon. A lot of clients I see will start Amazon and say, okay, you know what? I have a full-time job and I can make money on that and that kind of sustains my lifestyle. But what I'd like to do is build up my Amazon business. I want to keep, building and reinvesting profits. And those of you know, Amazon's capital intensive. So as you're making more profits and you're rolling them over, you're building up your inventory base so you can sell more. You can only sell it if you have inventory. So it's kind of chicken and egg. You need to keep buying more inventory to sell more. So the nice thing about a corporation, if you don't need the money to live on, you're just going to continue to reinvest it for a while, then having a corporation, you could pay a lower business tax, basically, like 12, 15%, depending on your province, versus, you could be up to like half of your income going in taxes if you're a high earner. So what that would do is, it's not a tax avoidance, it's not tax savings, it's a tax deferral. You're still eventually going to pay the income tax in your personal hands when you take it out of your corporation. But what it allows you to do is reinvest more of the profits, a higher percentage. If you're paying a lower income tax for your business, then you just have more to reinvest. So hopefully, you should be able to grow that nest egg of inventory quicker. So a corporation, you got to remember, is its own standalone entity. When you set it up, it should have its own bank accounts, credit cards, books and records. It files its own income tax return. It's different than, your sole prop. It's a little more complex, takes more time, definitely more money. I mean, just to set it up, you're going to pay, $500 to $1,000 in fees just to set it up. I mean, you've got an income tax return that's, a corporate one, and that's like, 3 times what a sole proprietor one would be. And then you got bank fees and everything. I mean, it's going to cost you, $2,000, $2,500 a year just to keep the thing kind of in operation. So it's got to make sense to you, if you're selling that much and, like you can reinvest in profits. Now, there's some other things, that are good about a corporation is like the liability. You've got a little bit more protection of, somebody suing you and going after your personal assets. There's a limited liability because they just sue the corporation and the assets in there. There's some things you can do about like income splitting. Canada, they don't really like that, but if you've got a corporation, then, you can kind of, there's some levers that you can pull to, maybe defer some income, split some income between your spouse who might be in a lower tax bracket than you if they're helping out in the business. Again, it's all going to be legit, but, there's some options to do. Another thing that's really good, and I have another video on it, is a lifetime capital gains exemption. So if you can get your business to qualify as a small business corporation, and you actually sell the shares, then they have what they call lifetime capital gains exemption, which is about $800,000 per shareholder. So you'd be able to sell your company shares, each shareholder tax-free, up to like 800 and change. So that's a big thing. Now, of course, you got to get it to qualify through CRA, and anything with CRAs, can be questionable, and they can not like it or deny it, but still, it's definitely doable, and it could be a very good reason. So, people that are starting up like a private label business and they all want to sell it out in 2 or 3 years, it might be a great option. Just start from the corporation day one, right? So that gives you a bit more ease on the transition for sale. The other thing, federal or provincial corporation comes up, it really doesn't matter. The federal really gives you more name protection, assuming that you're going to kind of operate across the country, but Amazon sellers, no one really cares. And chances are your corporation name could be a number company, it could be whatever. It doesn't matter. You're probably going to have different brands under it, or you're going to have a different storefront name. So don't sweat that. Just go on. I'm going to put some links below on some places where you can go and incorporate online. I recommend most people do it themselves. I mean, you can get a lawyer to do it, and they'll charge you a bunch of money and set up your share classes, but it's relatively easy if you just kind of, set it up, some common shares, to yourself, and then you can always issue new shares and things like that later. Not a big deal. But federal and provincial isn't that big of an issue. Don't get hung up on that. So, if you're new and you're starting out and you're not really sure what you want to do, if you're not 100% committed to the Amazon business, or, doing this, you're testing it out, I'd probably just say start as a sole prop. There's no need to go out and register a corporation. If you need the money to live on, and maybe you don't have a regular income, and just pay your regular sole prop income tax. It's easy. Save yourself the money, buy more stuff. That's what I'd probably do. Now, if you're going after a private label, or this is definitely for you, or maybe you've got some partners, and 2 or 3 of you are going in on it, and starting this business, then you might want to seriously consider the corporation right from the start. Okay. Some of the cons, of course, the increased costs, whether it's registration, bank accounts, accountants, all that takes extra time and money. Sole prop's easy to open, easy to close. You just kind of say, I'm doing business, and on your return, you say, okay, I'm done doing business. Corporation, it's easy to open up, but it's more difficult to close. You've got to ask for permission from the government entities and, do a bunch of paperwork. It's not a slam dunk. So, people think they can just quickly open a corporation and it doesn't work out, close it right away. It's not how it works. Also, credit for a corporation early on sucks, so you're still going to end up using your personal credit cards. Everybody thinks you're going to get this protection and liability, but chances are you're still going to end up using your own personal credit, and you're going to be on the hook because, a brand new corporation isn't going to get any credit to begin with. And home office claims, traditionally CRA's kind of denied that for corporations, but they're adjusting their rulings and different options. Okay. Now, while I've got you on this video, we'll talk about one more thing. Sorry, there's an airplane flying by. One more thing, should I register for GST and HST? Now, the rule, again, this doesn't matter if it's a sole prop or if it's a corporation, but you don't have to register until you've hit $30,000 Canadian in worldwide sales. So if you do the exchange rate like 24,000 US, if you only sell in US, but whatever, you can elect to register whenever you want. You can voluntarily register, and most of my clients, I suggest doing it, because once you're registered as a GST or an HST registrant, then any HST or GST you pay on purchases or services or buying goods for your business, you get that HST back. So, most Canadians know, once you've registered, you can charge it on .ca. Canadians don't really play that game. They all expect to pay GST or HST depending on their province, so they're not looking for a seller who's not charging it for the most part. They expect to pay it. So especially if you're doing like sourcing, if you're doing retail arbitrage, online arbitrage, you're buying stuff and you're paying GST and HST. So if you're registered and you get to claim that back, then it's really just cash flow. Cash flow sucks. It's the timing, but you'll be able to get it back. So you're going to lower your cost of goods sold by 5 to 15%, depending on the provinces that you're in. So why wouldn't you? All of a sudden, an extra 5 to 15% in your bottom line. That's pretty good to me. Now, obviously, once you've registered, you got to file, and you have to file at least once, in a year, and then you can close it. But if you're pretty serious about it and you want to do it and you want to maximize your profits, then I'd highly suggest registering. Now, some private label guys, they only buy from China, send it direct to the States, very minimal expenses, let's say, that would incur GST or HST, then okay, fine, don't worry about it. When you first start, you can basically elect to file annually. You can change it and say, I want to file quarterly or monthly, depending on your business model. So like some people, if they're buying a lot of stuff in Canada and then they're selling it in the States and they're not charging GST and HST, then they'll be in a refund position. So, it'll help their cash flow if they file it every quarter. But again, that takes more time to do. Yeah, so, I hope that kind of gives you a bit of an overview about, pros and cons versus incorporating and sole proprietor. You can buy insurance as a sole proprietor. You can buy insurance as a corporation. You can do, pretty much all the same business deductions and expenses in either structure. Now, for reporting, when you file your taxes, your sole proprietor is just on your regular T1 income tax. You just report, here's your revenues, here's your expenses. Your business is a lot more complicated. You got to report a balance sheet, and you got to track, a little more complicated using like QuickBooks or something like that, because you need your balance sheet, which is, all your assets and liabilities and things. But again, it's kind of each person that needs to make up a decision, what they want to do, and if they're in the business for the long haul and what their specific situations are, and kind of go from there. Again, you can always start with sole proprietor and switch it into corporation later. It's all doable. Well, I hope that answers a lot of the common questions. If you got some more questions, throw it in the comments below, and talk soon.